Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a company that has been giving dividends the past 50 years. It is considered an undervalued stock, and in my opinion, it is right now at a discount price, considered by many Wall Street analysis to be a buy at this point. So if you're interested in this company and you want to learn more a little bit about it, sit back, enjoy, hit that like button. As always, please remember it's not financial advice, this is just me sharing. Also, if you are new to the channel, hopefully by the end of this video you will subscribe. If you do, don't forget to hit the notification bell so you don't miss out on the new videos that I put out. With that said, let's take a look at this company. So the company I'm talking about is Target. The ticker symbol is TGT. It is a company that engages in the operation and ownership of general merchandise stores. So I shop here all the time. It is a great place to shop, in my opinion. There's so much products that you can actually go. I do a lot of shopping here as well. So let's take a quick look at Google. So you can see the performance year to date. It's down 36%. For the year to date, 34, and then the year, sorry, is 36. 6 months has been dropping 30% the past 6 months. And then for the month it's down almost 9%. The last 5 days is down 6%. Definitely something to look at. I think it might go down a little bit more considering the market has been going. If you can get it a little bit cheaper, I think that would be great. PE ratio is about 17. The dividend yield is 2.83, and then the market cap is about 70 billion. So if you look over here, you can see in July 2022 the revenue was 26 billion. It was up 3.49. Net income, you can see EPS and the profit margin, and then you got your earning calls over here. Yeah. Now if we swing to Simply Safe Dividend, based on their dividend safety score, they rated as 90, which is very safe. Again, the dividend yield is 2.83. It is considered a large cap at 70 billion. If we go down to the key metrics, you can see payout ratio is about 41%. Forward payout ratio is about 39%. And during the recession, they have increased their dividends. And then if you look down to the dividend growth, you can see the last 20 years, 14%, which is very fast. Last 5 years, 6%, and then the latest is 20%, which is very fast. And then again, always liking the upward trend. 50 years without a reduction and 50 years consecutive increases. If you look at the payment details, you can see quarterly in the months of March, June, September, and December. And then your annual payout would be $4.32 per share, which breaks down to about $1.08.90. And then if you look at the dividend yield, it's again, it's higher than the 52 5-year average. If you look at the PE ratio, 13 versus the consumer discretionary, which is 11. Now if we swing by to some of the stats in here, return on investment capital, last 12 years 19%, return on equity, last 12 months is 33%. Now let's swing to Yahoo Finance. You can see 52-week range, the high is 137, and then the low is 137, and the high is 268. And then you can see the performance outlook is a mixture of bullish and bearish. If you swing at the earnings, you can see the last 2 quarters have been a miss, and then the revenue has been going up though. So you can see from 2021 it's at 93 billion, and then 2022 is about 106 billion. So, and then you can see the recommended trends mostly holds in the month of September. And then the rating is a mixture between, so it's a buy right now. The target price is 191 and currently is about 152, so it's in the lower range. Sticking to Yahoo Finance, you can see based on the chart, this is the 5-year comparison between the S&P 500 and Target. You can see pretty much Target has been beating versus the S&P 500 for the past 5 years. If you look at the 2-year one, for the most part, Target has been beating, but then there's that sell-off right here. Now it's under that one. Yeah. Now, if we continue looking at Yahoo Finance, who are the top institutional holdings, you can see Vanguard, BlackRock, State Street Corporation. You got Bank of America, Wells Fargo. So you look at the shares, pretty good amount of shares for these companies, these institutions. Looking at NASDAQ, you can see based on 27 analysis, they rated a strong buy. And then these are the analysis. You got Citigroup, you got all these guys, Goldman Sachs, and then you got Wells Fargo. And then looking down to the price target, you can see a high of 223, an average of 191, and then a low of 161. Now let's take a look at TipRanks. Based on TipRanks, the price target is 194 with a 27% upside, with going in a high of 215, an average of 194, and then the low of 165. At the time of this video, it's about 152. Analysis rating, a moderate buy, 14 ratings, 10 buy, 4 holds. Now if we swing to more analysis, you can see Smart outscore rated as a 9 outperform, and then you got your hedge fund holdings, which they have increased. So if we look over here, based on the hedge fund's confidence signal, it is very positive. And then you can see the trend has been hedge fund increases holdings by this amount of shares last quarter. And then if you look over here, you got your dividend yield right there. Yeah. Now if we swing at bar chart, you can see the high of 223, the mean of 193, and then the low of 161. And then their rating is also a moderate buy for the past 3 months based on 25 analysis. And then you got a breakdown of 16 buy, 7 holds, 2 moderate buy. Now if we look at more information on bar chart, based on their technical opinion, they strong sell. Now if we look at their moderate buy, you can see 25% moderate buy, you can see like only, but then over here the technicals. So if we look at the technicals, you can see the yesterday it's been 88% sell, 55% sell, and then 56% sell. So you can see based on the moving averages over here. Looking at Stock Rover, based on their analysis, they rated as a buy. You got 16 buy, 2 holds, 7 holds, and 0 sells. And then the price target right here is at 193. The high also is 223. Looking at Seeking Alpha for the performance of the 10-year performance, you can see it's up 140%. And then lastly, looking at Simply Wall Street, based on their share price and fair value, their fair value rated it at 308, and they use the discounted cash flow model, and the current price is 152, which they feel is about 50% undervalued. Now if we go to the company overview, you can see the positives and the negatives. You can see trading 50% below estimated fair value. Earnings are forecast to grow 14% per year. And then you got the other ones. And then your risks, high level of debt, dividend October is not well covered, profit margins are lower than last year's, and then significant sell over the past 3 months. So that's about it. So for me, it's a definitely good stock to invest on. It's one stock that I think would be great in times of like these with the recession. I think people are going to still go to Target to shop. Probably not as much because they're probably going to use money for something else, but I think it is based on the 50-year dividend growth streak, I think it's going to be okay. But definitely do your research. Also, if there's other stocks that you're interested and you want to find out more about it, go check it out. Check out all these other videos. As always, please remember, it's not financial advice. Please stay cool, keep investing, and I'll catch you guys in the next video. Right? Take care. Bye.